Welcome back. You're watching our special series Outlook 2017. I've been in conversation with Rhythm Desai of Morgan Stanley. The big event of the next couple of months as we wade into 2017 will be the union budget. There are expectations this time that the government will do something to mitigate the pain it has inflicted on people. Should the market be expecting a lot from the budget?
Udayan, if you go back over the last 25 years and you've covered the budgets as long as anybody has, I mean, which budget created permanent change in share prices? You can point out maybe one or two over the past 25 years. I mean, clearly I remember 1991 was a mega shift, and that clearly established a higher trend in share prices. I think budgets since then have brought about incremental changes. And I don't think we should rest our hopes that the budget is going to make a major difference. The policy environment is crucial. I think fiscal consolidation is crucial. We certainly want the government to continue on this path of fiscal consolidation. It's now bearing fruits. So to me, that is one important thing. The second is infrastructure spend. Again, given the weakness in private capex, it's imperative that the government continues to spend on infrastructure like it has over the past 2 years, and we'd expect continuity on that. Already the finance minister has told us in the last budget and the prior one that there will be a rationalization of corporate taxes. So I guess we'll continue to see that as well. And then there will be some tinkering at the margin which will bring impact on certain stocks and sectors. But I don't think it's going to leave a permanent impact on the marketplace. So I don't think we should assume or hope that the budget is going to bring about a major change. It will kind of cause a lot of volatility on the day. And in fact, I would say that even that volatility on the day has been declining over the last 20 years. So the budget day volatility has substantially declined as well. So, you know, it's a great event on television. It creates a lot of fanfare around it, but its impact on share prices, I don't think is as crucial as you know, recent history has shown.
You're right. What about monetary policy, Rhythm, in 2017? Because of all that is going on, do you think the market should expect 2 or 3 rate cuts in 2017, or has the picture been complicated by the fact that the US Fed actually wants to raise 2 or 3 times next year?
See, I think, Udayan, this is a very important question you're asking, and in fact, just to go back to the budget question, let us not underestimate the importance of the deficit. I mean, it's something that the market does not necessarily pay so much attention to, but I think consolidation of the fisc is a very crucial policy input, and that's the most important thing that will come out of the budget. So for share prices, I think if the government sticks to a fiscal consolidation path, I think we should probably see better growth and stability for the macro. This is exactly what they have done over the last 2.5, 3 years, and therefore the same about monetary policy, which is we have had a framework of positive real rates, which has ebbed inflation, which has helped bring down inflation. It has helped restructure or rechannelize Indian saving from physical assets to financial assets. So you can see that in insurance premium, you can see that in equity flows, you can see that in deposit growth. Clearly financial saving has become more important, and that has in turn helped to heal the economy. The reason why the growth outlook was looking better or looking up was primarily because of these 2 big policy inputs. So I think it remains a crucial policy input for 2017. You are absolutely right. I think the Fed path essentially means that the RBI is likely to be constrained. So we don't think 2 or 3 rate cuts are in order. This recent policy from the RBI reaffirmed that. They want to stick to the path of maintaining 100 to 150 basis points of real rates. And I think that's the right policy to pursue. It will keep India's current account deficit in check, and therefore India will actually be less vulnerable to the Fed rate hikes. In fact, probably the least vulnerable it has been in the last decade or 2. And that's a nice position to be in, which, you know, therefore brings us back to India's relative position in emerging markets, which I think again is very strong. So which is why I think even though the rest of the emerging world is going to struggle a bit because of a rising dollar, India seems a little okay because we have our policy in place. So both the fiscal and the monetary policy, if they act in tandem in this fashion, I think will actually help India's stability as well as growth in 17.
Would politics be important in 2017? Because we've got the biggest of state elections, UP maybe in the first quarter of the year, even as early as that. Given the whole noise around demonetization, does that assume a lot of importance now, even for the stock market?
I think it will certainly bring some volatility, but unlikely I think it affects the trend in any major way. So can it affect share prices for a week or two? Well, it can, but will it determine how 2017 behaves? I don't think so. So I would rather say that fiscal and monetary policy and what happens in the US will be greater determinants than what happens in the UP state elections.
Okay, let me end by asking you about earnings, Rhythm, because you made the point about the world recovering. Is it your understanding or assessment that commodity prices have bottomed out globally? Now, on one hand, that might have positive implications for earnings growth for commodity companies, but do you think the trend of improving margins, which we had seen over the last many quarters, that may be actually a thing of the past as we wait forward, and we need to see more by way of improving volume growth, etc., to drive the kind of double-digit volume earnings growth that you are expecting at Morgan Stanley?
See, Udyan, I think it may affect certain sectors. So let's take the example of the sector that benefited the most from falling commodity prices, which is, say, consumer staples. So I think staples will struggle a bit as commodity prices stabilize or rise. It's not our view that we're in for a big bull market in commodity prices, but clearly they're off the lows. So the sweet part of the consumer staples earnings, which was rising gross margins, is behind us. Other sectors may actually not be affected in this fashion. They may in fact benefit. So I think at the end, it's about the terms of trade that India has, and rising commodity prices does upset it to a certain extent. India's terms of trade will suffer slightly. Therefore, we have to respond with stronger domestic policies to overcome that. And in the end, if we do that, then I think the aggregate earnings still do better, even though at the sector level, maybe consumer staples doesn't do as well. So this is actually reflected in the way we are positioned in stocks, which is we are underweight consumer staples, and we think it's going to be challenging in 2017 for them to generate earnings growth because their margins will be under pressure. But I don't think that applies for the whole market as such. So, materials will offset that by probably benefiting from this and will offset the weakness in staples. Other sectors like, say, technology are not affected at all. And they will, in fact, benefit if US growth improves. And given what's in the price today, which is everybody shuns technology stocks, and stocks are as cheap as they've been, I would actually be positive on the shares of technology companies, and therefore we are overweight technology. I think financials benefit from what is happening in the macro today. Deposits will rise in the system, therefore there's scope for better lending growth. And as the dust settles down on demonetization, I think people will probably come back into financials. Therefore, we are overweight financials. So I think these sectors are less affected by the question you asked. Consumer staples maybe is, and therefore you want to avoid that.
It's always a pleasure talking to you and hearing your thoughts. Thank you very much, and you have a great 2017.
Same to you. Thank you so much, Udyan.